All right, we're going to be looking at the British pound here. I went long here on a fair value gap, which is part of the reaccumulation phase of a market maker buy model. And the obvious relative equal highs up here, I have the little eyeball at. And I have a 50 pip objective on the trade. I'm going to take partials as soon as we get above those relative equal highs. So right now we have essentially an optimal trade entry for the New York session. At 10 a.m. we had the consumer confidence number for the dollar index. And we should see the British pound start to move higher. The London session created a low of the day, relative equal highs. This is like one of the easiest setups there is. I mean, this is basically YouTube. This is like YouTube level without the fair value gap. It's optimal trade entry after London's created a low of the day and relative equal highs and a high impact news event for New York session. Slow start to this trade. Okay, I want to start seeing range expansion in here on the upside. Now I'm looking for a run above those relative equal highs, and I'm thinking that at 138.50 I'll take a partial there as well if we can get up there. Now I'm looking at the time. It's getting close to 11 o'clock in the morning, New York time, so it needs to start speeding up and trying to make an aggressive run for those buy side liquidity pool. Okay, so far it looks really good now. And I want to see a real big stretched out candle or a series of candles that are bullish. And if it can continue that, I'll feel comfortable with reaching for that 138.50 mid-figure level, which would be a nice objective above the relative equal highs. And it's just creeping below, crouching below that relative equal high. There we are, punched above. So I'm getting ready to take a first partial off. Okay, more than 50% of the position has been taken off. Now as we get to that 38.50, I'll take another partial off and let the rest roll. Stops have been rolled to better than break even. My eyes watching that 50 level, and here we are. All right, so here is the daily chart of the British pound, and we have recently swept the sell side liquidity pool here. Drove below that, has come up. On this day here, we had a down close candle. So I'm noting the high and the opening price. Those are the two levels I'm interested in. Price comes back down in during the day. We open up here, notice that. Okay, we open here, trade all the way back down into the daily bullish order block, and then rallies back up. Now, I have this level here anchored on the relative equal highs. If this continues, okay, if it continues to go higher, I mentioned this in commentary recently, that we could potentially trade up into this fair value gap and attack the buy side liquidity there. But for now, the short term is the focus right there. All right, but main thing is power 3, the trade down into the order block here, and then rally up. All right, 15-minute time frame on British pound. Here is that daily bullish order block, the high and the opening price. It trades down into that here. London session creates the low of the day. Fair value gap in here, trades down into that. Rallies. Relative equal highs. Buy side liquidity pool. We drop down ahead of the 10 o'clock news. And then we consolidate during and shortly after the news comes out. And then it runs for the buy side liquidity. Hammers the 138 mid figure. Trades all the way up to the 138.80 level. And then consolidates. And this high right here, we're going to take a look at that when we drop down into the 5-minute chart. My entry was here, trading at 138.18 and 2 pipettes. I was trying to get in below that 20 level. Okay, so while we were trading down in this candle here, not on the highs as it was starting to trade back down in, I wanted to get in just below that 20 level, knowing that if it runs above here, it could spread its wings to the mid-figure 50, and ultimately it can go to 80, but I want to be out before it gets there because it might fail. It might consolidate below it and then require tomorrow's trading to trade to 38.80 or the 39 big figure up here. So just bread and butter setups, just working with small ranges that are easily discerned and how to navigate within them. So we have a fair value gap in here. The market comes back down into that, consolidates, and there's going to be an optimal trade entry. You'll see that when we go on lower time frames. All right, on the 5-minute chart, you see that 15-minute time frame fair value gap there. New York kill zone. So we're inside of that here. And we're trading back down into the order block there. And the order block's opening price and high, that was what I was watching live at the time. It overshot a little bit, traded a little bit deeper than I would have liked to seen, but nonetheless, the underlying market structure was still intact. And then the displacement to the outside running quickly through the mid-figure and up through the 80 level. All right, so we are looking at the change in the state of delivery with this down close candle here, the opening. Everything else after that is delivery on the upside. So this is where the algorithm changes its state of delivery. Anchor your fib to that, to the high. You can see we traded down into an optimal trade entry and 70.5 level. Isn't that amazing? Not your classical Fibonacci approach, but it's consistent, isn't it? Because the algorithm is looking for these areas in terms of range, overbought, oversold, and that's what it's measuring here, these two price points. So it's coming back down in, finding that level, and then shoots up and attacks this level here. So if you put your Fibonacci on the 5-minute chart of British pound using Forex.com's data, put it on the opening price of this candle right here on a 5-minute chart, and anchor it to the high here, okay? And this level here, 138.94 and 3 pipettes. Notice I'm having this little marker right above that candle right there. When I screen captured this, I have my mouse like it is right here, right underneath that candle. So that way all the data over here is showing for this candle right there. Don't take my word for it. I want you to go into your own chart and do it. And you'll see that the high is 138.94 and 3 pipettes. What's the projection here? 138.94 and 3 pipettes. Perfect. Okay. I want to be out. I don't always hold for that target. That's an ideal, obvious target. That's a trophy win for me. But if it runs to my objective and gets me out at 138.68 and 2 pipettes or whatever, then great. That was my trade. That's what I wanted. But my belief was that it could potentially trade up to here. So over time, you're going to gradually work towards a comfort level that you'll probably want to get closer to these objectives. Whereas over time, I've learned that sometimes it could just fall short of that and consolidate just below it and never give me that, and then maybe retrace a little bit. And then I regret not having taken something out. So 50 pips is 50 pips, folks. And you got to get it where you can get it. And it's not about capturing every piece of the pie, every piece of flesh off the bone. You're just looking for bread and butter income. Because if you consistently do this and then you apply really good sound money management to it, you can parlay your account up really big and not have to do a whole lot of trading to do it. But nonetheless, you have to have some kind of measured success that's consistent. You can't just be hit and miss, but you have to be rooted on something that repeats over and over and over again. And that's what this mentorship's given you. It's giving you rule-based ideas that help you work towards finding out what these markets are doing in the London session and the New York session. Predominantly, if you haven't already noticed this year, I'm really pushing you hard to focus on this New York session because it's easy to build income there. Now, you all want the absolute high and the low of the day because that would be a testimony that you know what you're doing. Yes, I agree. But right now, I want you to start graduating towards what would it take for me to be making extra money, okay? Not that I want you to rush into live trading, because if you're in the core content making payments and you're not a charter member and you haven't been a charter member for at least 6 months, consistently finding your model delivering as you would expect in a demo account, then you have no business in a live account. But looking for these types of setups, this replaces a job. And if it can replace a job with sound money management, and yes, I've been asked, am I going to talk about optimal F and things that you can utilize in market making concepts and money management? Yes, I'm going to cover that. But let's get everybody in the charter member first, okay? And real quick, for those that are in the 2021 group that have made accelerated payments, the charter membership area for your group will be established and you'll be applied to those this Sunday. We'll start moving people and migrating everyone that's made their charter member payment in the 2021 group that's accelerated their payments. They will be gradually moved in. Now, it won't happen. Listen real carefully. It doesn't mean Sunday morning when you wake up, okay, or Sunday when you go to bed, or right before you go to bed. It doesn't mean that you're going to be in the charter area yet. It just means that my staff will begin on Sunday populating the charter member area for the 2021 group, okay? Because you're in truncated subgroups, so that way I can track everything that's being shared or resold, and I'm ready to throw you out the door if you're doing it. So I appreciate your patience. I know some of you are really, really excited, but just settle down, okay? You have a lot of things to go through. You just literally paid for a lot of content you didn't even digest yet, so just slow your roll. And I think that's going to be it for today. I'll touch base with you tomorrow in our midweek commentary. Until then, be safe.